Hello everyone, and thank you for joining us on this discussion of what happened in markets in June. Today we'll focus in on a number of those key factors that have been influencing market outcomes, but also the true potential portfolio solution. To give you an idea, we'll be focusing in on inflation, economic growth, the value versus growth debate, also what's been happening in China over the course of the month. And we'll bring that together to discuss the true potential portfolio key themes and how they relate to the construction of the true potential portfolio solution. I'm joined today by Chris Leyland and George Bell to do that, and they will introduce themselves shortly. But also for yourselves, just please log in and look at the individual chapters of the discussion as well. Turning to the first theme, and that of inflation. We've discussed it a lot on our morning markets videos, but I'd like Chris now to really bring that to life as to what's been happening over the course of the month of June.
Okay, thank you, Jeff. So on the chart, you can see both UK and US inflation. And what can you see? Well, inflation's elevated. We all know that. But really, the key point here is what is our outlook. So if we start with the US, our view is that inflation is potentially peaking around now, and that we'll see inflation come down as we move through the second half of this year. If we move to the UK, then inflation will move higher as we move through this year, but then will potentially come down near the end of the year into next year overall. But really, I think one of the main points that we've been discussing as a team is the fact that where will inflation land? And our view is that inflation will land higher than central bank targets overall. But what are central banks doing around inflation? Well, they're raising interest rates. And we believe that central banks will continue to raise rates overall, even in light of potentially weakening economic growth.
Thanks, Chris, and that's really highlighted the challenge that central banks have in the face of slowing economic growth, and we're certainly seeing some regional nuances to that. George, did you maybe bring that to life for our viewers today?
Yeah, absolutely. I think a few of the points come from the inflation discussion. Economic growth has been accelerating at an incredible rate coming out of the pandemic, and we were anticipating a moderation in that. That moderation has been accelerated by higher inflation, so living costs are higher at this point in time, but also the efforts which central banks have been taking in order to combat that inflationary environment which we're currently in terms of raising interest rates at this point in time. So we're seeing a slowdown in terms of economic growth. What does that mean in terms of recession risk? Well, at this point in time, we're not anticipating a recession in the US for 2022, but recognise the risks of that have increased as we look into next year. Those risks are slightly elevated in the UK and in Europe, given the higher energy costs which are being imported to those key regions.
Okay, well, we've discussed the impact of inflation, how central banks are raising interest rates, and how that will impact economic growth, or has the potential to impact economic growth. The other area where it does impact is in styles and equity markets, and certainly over the year to date and month to date, we've seen a differentiation in terms of the performance between value and growth. I wonder, Chris, could you bring that to life and discuss just how that has really influenced the portfolios as well over the month of June?
Absolutely, yeah. So if we start off with year to date, what have we seen in respect of value versus growth? So value focused equities have outperformed, so they're down 10% year to date, and that compares to the more growth style focused equities, which are down 28% year to date. But maybe just to give you an example, so rather than use the names of the styles, I thought I'd give you a company example. So Tesla shares, so what we would potentially class as a growth style share, is down 36% year to date. That compares to BP, which are actually up 16% year to date. So that really illustrates the disparity that you've seen between stocks and individual styles overall. I think if we bring it to the month itself, Actually, what's quite interesting here is, in some ways, it was a month of two halves. So what do I mean by that? What I mean is actually we saw that continuation of outperformance by value at the start of the month, but then actually you started to see growth outperform as we came into the second half of the month overall. But really what's important here is the True Potential portfolio proposition, and we have been overweight value, so we favoured value over growth, and that has been really beneficial for us here at True Potential.
Well, we've discussed the policy dynamics in that form of interest rate rising and tightening of policy in developed markets. One of the contrasting markets is China, where there's been a number of changes over the course of recent weeks that are certainly worth discussing. And George, can you maybe bring to life some of those measures and how that's impacted how our managers have thought about China as an asset class?
Yeah, absolutely. So China is one of the key manufacturing hubs of the world. The challenge which we've had, which is fed outside of China in the rest of the world, is they've been under restrictive COVID policies. That's essentially full lockdowns around key manufacturing states and province. What we're starting to see at this point in time is slowing economic growth in China, and therefore a real effort to stimulate that growth by government. The ways in which they've done that is to start to moderate those activity restrictions. Now, that will be a volatile or a moving picture as we move throughout the year. However, we're seeing easing restrictions and the introduction of additional fiscal measures in order to support and to stimulate growth. So that includes things like tax rebates, it includes incentives to get out there and spend on things such as electric vehicles. So there's a real effort and a real push behind stimulating economic growth within China at this point in time. And that's feeding through into the sentiment which analysts are seeing around China. We talk about purchasing managers' indices, which really give a forward-looking view of how supply chain managers are thinking about an economy at that point in time. And looking ahead, China's numbers are looking a lot more optimistic. Our managers are supporting this view and are actually investing in China within the True Potential portfolio. So in terms of opportunities against a challenge backdrop, that is one area where we have seen managers move.
We've discussed a number of the big picture factors that are influencing markets over the month of June, and it's also really important that we bring that back to the True Potential portfolio solution. What are some of those changes that have happened as a result of the backdrop that we've been discussing? I'll just hand over to Chris now to bring those changes to life at a portfolio level.
Excellent. Thank you, Jeff. So with the True Potential portfolio proposition, there are two levels of active management. So they're the changes that myself, Jeff and George enact to the True Potential manager lineup. And as well as that, there are also the changes that our individual managers are making. Now, over the month, we have taken a decision to make no changes to the manager lineup. So the allocations to each manager is the same as the previous month. And the reason for that is actually our managers have been making changes themselves that bring the portfolios into line with our key themes overall. So maybe let's look at some examples of those changes. So first one is our in-house multi-asset fund range, so the True Potential Growth Aligned fund range. And what they've been doing is moving a little bit more defensively within their equity allocations. So they have reduced exposure to US small cap and recycled that into large cap stocks overall. As well as that, they've also increased their exposure to bonds, so increased exposure to both sovereign bonds and also investment grade corporate bonds. If we look at what some of our other managers have been doing, if we look at, say, for example, Pictet have also been managing the risk within their equity book, and they've been doing that by selling out of the mining position that they have, and they've been adding into both healthcare and also into Swiss equities as well. If we look at Close Brothers, so Close Brothers has been moderating some of that growth style that they have that we talked about previously. So they've done that by selling out of Adobe overall. And they've also introduced a new alternative fund as well. So again, another way to find sources of return outside both of equities and bonds. And then maybe just finally from me, Allianz, we've seen a reduction in equity in respect of both UK and US equities coming through. So really the key themes that we're seeing coming through there is a moderation of equity, a move towards more defensive equity, and our managers are finding a lot of opportunity within the fixed income space.
We've discussed the economic backdrop, some of the changes that our managers have been making to the underlying funds that form part of the True Potential portfolio solution. I just wanted to bring that to conclusion by asking George to really summarise how the True Potential view has evolved over the course of the month, reflecting on both the economic environment but also the changes that have been made to the portfolios.
So bringing all of that together, we recognise we are in a slowing economic growth environment. We are in an environment of inflation higher and potentially more persistent for longer, though we do anticipate inflation prints to moderate as we move through the year. We recognise central banks have a real challenge on their hands in terms of raising interest rates, tightening monetary policy into a slowing growth environment. And for that reason, we have been moving more cautious in terms of our portfolio positioning, both in terms of the level of equity which we hold, but also in terms of the type of equities which we hold. We've been moving from those more economically sensitive parts of the market towards the more defensive parts of the market.
That'll have brought to life the True Potential portfolio changes and what's been happening in asset markets over the month of June. Thanks to Chris, thanks to George for bringing that to life for our viewers. And please do remember that you can access all of these commentaries by logging into your account.